Hello there, Maverick traders. This is Rob Reinhold. It is December 3rd, and let's jump into it. Today was, frankly, a pretty boring day. In this session, we're going to go over the news of the day. We're going to talk about the commodity markets, and then we're going to take a look at our sectors from top to bottom, and we're going to find some decent trades. I got one bullish setup, one sideways, one bearish. Notice I said decent trades. I'm not loving the market price action at the moment.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, let's start off with the news of the day. So we had the Asian markets rise overnight. So the markets were already on strong footing, and then we got the JOLTS job numbers. Now these are numbers that we've been watching for about the last 2 years, and we started watching them because the Fed said that they were watching these numbers. It was above 10 million, and we've consistently gone lower and lower pretty much every single month. This month we actually didn't go lower as was expected. We actually jumped up higher. Now look, this isn't inflationary. At some point, yes, it might be a problem. This is more of a sign of a labor market that weakened and is probably either bottoming or actually getting a little bit stronger. That's actually really good for stocks, and they reacted nicely. We had new all-time highs today. It seems like every day we have new all-time highs in the markets. When we take a look at the performance, though, we can see it was very tepid performance. So we've got the Dow basically flat, the S&P flat, the Qs up 0.4%. That mostly came in the last 5 minutes of the day, and a little spike. It was up about 0.1%. So look, nothing great. Small caps are underperforming. I think the small caps are quite worried about the potential tariffs coming. And then you can see gold flat. The only thing that even had some movement today was oil, and it's still just stuck in a range. So ultimately, this day was a pause kind of day. And if we take a look at the charts are telling us that, again, we had this pullback. We talked about this 2 weeks ago, how this was a bull pullback and you had to get on board. And you can see we went up, and then we had a doji candle, a red candle, saying, okay, this could be a pullback at resistance. And you can see we did not get a confirmation candle. We got another red candle, and then we blasted right through. We have spent a lot of energy getting from 58.70 all the way up to 60.50. However, we've been trying to pull back, and you can see it has not pulled back. It has just been grinding and grinding higher. What I see most of the times when I see this pattern is it keeps grinding higher and frustrates all of the shorts that are trying to short this market, and then we get a blow off top. I fully expect that we get a blow-off top candle here in the next couple of days, and then we get the actual pullback. So that's why I don't love this price action here, because if I am long, if I'm already long, that's great. It's perfectly fine. But if I'm looking to take new longs, am I going to get in on breakouts on the blow-off top day? And then all of a sudden, I'm not in a great entry point. I would really much rather just either take profits or ride my longs through this nice blow off top if it happens, and then really be sitting back and waiting for a better opportunity to add some longs. So that's why I said I don't love where this market is. I do think we're going higher. I do think we're going to have a one-day pop of 1% to 2%, but then I don't think there's anything after that. And then we have a pullback coming. So again, I just don't love where the market is. If you take a look at where the Qs are looking a little stronger. They just broke through this last swing high, but I think we're going to see the same thing happen with the tech stocks as well. So ultimately, again, I am still bullish, and I still think the market's going higher here, but I do think we're pretty close to a blow-off top. So I don't love, getting into a trade that I have to be in for 3 weeks here. I just don't like the entry here. I love the fact that I'm already leaning bullish. I love the fact that my trades are working out nicely. But for new trades, unless they're fairly short-term in nature, I don't really love them here. One of the things I want to take a look at, and we didn't look at this, but the advanced decline line today, this was the second day. Yesterday was a negative advanced decline line, meaning more stocks went down than up, but the market was up yesterday. Today was another advanced decline line below 50-50. So as you can see here, we're getting the move by the large cap tech. Microsoft, Nvidia, Apple, Amazon, Meta, Google, Walmart, Tesla. Those are the ones that have been pulling this market up. The rest of the market is kind of hanging out in more of a basing price action. But that really, again, we can take a look at some nuance, but in the end, we still have to be at a +3. This is a bullish market, the most bullish the market can get based on our 3 indicators. So at this point, again, you've got to be leaning long. You should have already been leaning long, and there's no reason not to continue leaning long. There's just no reason whatsoever. Like I said, I'm just looking for, again, over the next week, are we going to get that spike and then get an actual pullback after that? I don't really want to jump into that. So I want to either do things that are longer dated, maybe 3, 4, 5 weeks out. I really don't like entering trades that are a week or 2 out here. I just think that blow off top could be, again, if you took profits during it, great. If not, you might not be correct on your timing. Let's take a look at a couple of potential trades here. A lot of things are overextended. A lot of things are sitting at areas where I typically don't like to buy them, to chase them. So we'll just focus on some of the ones that are still showing a decent pattern. First up is Reddit. Good old Reddit. Reddit is one of my favorite social media. If you get it, you get it. If you aren't on Reddit, then you don't get it. You don't understand how beautiful it is. Again, new high. We pull back right to the support point. Yes, these 2 candles weren't great candles, but today's candle was a great candle. It's telling you, okay, we're either going to be basing here or we're going to be breaking out to new highs. So we got at the low of the base, probably about 137. At the high of the base, 157. This is where, again, you can play this as chicken as you want. I think a 150, 155 vertical spread is a doable play. I even think you could do a 145, 150 vertical spread. That's going to bring you in probably about $1.80. That means you got 320 at risk. This is a really wimpy trade saying, hey, I just think this is not going to go down. So this is Reddit here. Again, like I said, I think if we do get that blow off top, I think we could easily break through this resistance right around the 160, but I don't think it's going to hold up there. I can see us blowing through it and then having a pullback back to level. So if you want to play for that, I think you want to play just long calls so you can exit on the expanded range candle, and then you can just move your capital into something else. Next up on the sideways end is ExxonMobil, XOM. We got a range here, 122 to 115. I think you just want to be smack dab in the middle of that. So that's going to be like a 115, 118, 121. Again, you could adjust that up. Maybe you want to go up a little bit to 119. Maybe you want to go down to 117. But it looks like this thing wants to hang out in this area, the 116 to the 121 area. That's the area I like for this on a sideways trade. And then I've got one bearish trade for you, and this is in NTLA, Intellia Therapeutics. Again, I've never traded this one before, but hey, I don't care. It is a ticker symbol, and it has a beautiful chart. Again, we have a stock that has been weak for a long time, and just having bear rallies and then falling. And you can see here, nice bearish candle here. There's no reason to think that this thing short term doesn't get back down to the support at 13. Longer term probably gets down to the 1150 area. So this is where we can be a little bit more aggressive. But again, I don't love to be super aggressive on bears when the market is ripping higher. I just don't like it. So I'm looking at stuff like a 13-15 bear call spread, or even a 14-15 bear call spread would be absolutely acceptable. You're going to get in about 60 cents. So that means you're going to have 60 cents of upside potential, 40 cents of downside potential. If it rips above 15, who cares? You've got a spread on, it doesn't matter. If it falls below 14, who cares? You got a spread on. You're just playing it very controlled way. If you did want to get a little bit more aggressive, I would say go down to a 13. Do a 13-15 bear put spread or a bear call spread. Either one. Doesn't really matter. So let's talk about tomorrow. We have the ISM services report, it's going to be a number. It might move the market a little bit, plus or minus 0.3%. We also have Powell speaking tomorrow. I don't know what he's speaking about, where he's speaking, but it is on the calendar. And then understand we have some good earnings after the bell. So take a look at things like CRM, Salesforce is moving higher, Okta, another software company, is moving nicely higher. So we have 4 tech companies after the bell that are moving higher, anywhere from 8 to 15, 20%. We're likely going to start off on a positive note, at least on the NASDAQ stocks tomorrow. Like I said, I think this market creeps higher until we get the blow off top. Then I think it's probably time for a little bit of a pullback and adjustment. Thanks for joining me. Goodbye, everyone.